Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. It's Teaching Tech Tuesday. Let's take a look at volume using the visible range volume profile, VRVP. So on the chart, most any standardized charting software will have volume in some form. That's volume per day on the x-axis here. Green volumes being buy volumes, red being sell volumes, growing versus falling, generally what it's called. You can add a moving average on that if you'd like. I usually keep that off. Volume definitely has its applications and uses. I don't pay too much attention to it most of the time, unless I'm watching a chart pattern, watching a consolidation range, trying to see is volume contracting or expanding, is volume rising or falling after X number of days, that sort of thing. Do we have a big washout like we did when FTX blew up, or when miners capitulated in China and they had to sell, right? Do we have events like that on the chart? But most of the time I'm not using volume in this way to help make trading decisions. If we add a different indicator to the chart, VRVP, that will give you volume at price. So if we zoom way out of the visible range, we can see all of the volume at a specific price bucket. The more we zoom out or the higher time frame we go, it may not be super useful to try to understand where most of the volume was, let's say between 60 and 70K. So you probably want to zoom in a little bit. And really what I use this for is finding support and resistance. On the way up in price discovery, there is no resistance because there was no price history up there, right? There's no volume resistance at the very least. Now we can adjust these price buckets. We can adjust the row size larger or smaller. If we take this, to a maximum of whatever you want, 1000, the buckets get smaller. If we go 500, the buckets get a little bigger, 250. And I don't have like a right answer of what to make this, other than you kind of just have to dial it in to whatever you feel like helps you the most, which is really a non-answer. But if we zoom into, let's say, the past couple months here, make the visible range here, all of a sudden it becomes a little clearer where most of the volume has been happening. We've seen a lot of volume up here, a lot of ranging, a lot of selling, a lot of buying, a lot of coins changing hands. But below 60K, it's kind of a dead zone, right? There's kind of not a lot of volume below 60. So currently how I would read VRVP would be there's a volume support node at 52. And you might say, well, obviously that's where we consolidated last. Sometimes it's obvious, sometimes it's not. Reading this range, for example, you may not think most of the volume was at 43.3, but that's where it is. So in any case, on the downside here, 52 would be the support, and it makes it obvious and easy to see. Tons of upside volume that is concentrated at 67. So one way to read that would be if we're able to get above 67, we're probably in the clear on the resistance side. Outside of the obvious horizontal at 72, volume is telling you 67.7 and 63.1. I'll come back to that one, but that's another level to watch. You may also notice a line down here. This is the largest volume area in the visible range. So it's called the point of control. Now, if we zoom in just this range, we will get a different point of control once it adjusts, calculates. So that's giving us that 67 level. It's giving us 63. Again, you can adjust this. This is subjective. It's variable. Sometimes you want to see a year's worth of price history. Sometimes, like right now, you probably only want to see this range. Where's the volume support on the downside since the ETFs launched, right? That's really what most people are going to be wondering. Where is support? Support is obviously at 52 and 43. Those are the two big levels. And then we can start to measure things like the M double top, the fibs, the measured move to the downside. Where does that go? That goes somewhere in the 40s, similar. And then we can say there's confluence there, right? So you can adjust these further. This is all personal preference. We can make them very loud or very quiet, depending on how much in your face you want them to be. But I find these much more valuable from a trading perspective than volume per day. It's a stupid simple way to just put levels on a chart without always adding horizontal levels. Now what you could do is add the horizontal levels and just take this off and say, okay, we know there's levels here, here, here. Okay, what do pivots look like, right? Well, there's also a pivot at 52.5. There's also a pivot at 62.7. And then we've got the point of control down here. So those would be the big levels to watch in this range on the way up and on the way down. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. On Kraken, we can also add, they call it VPVR, depending on which update in which software you're looking at, it's going to be VPVR or VRVP, volume profile of the visible range in this case. And you can, of course, look at this on any coin. We can go to ETH and instantly sort of see where is support, where is resistance. We can adjust this a little bit. Let's go, I don't know, 250. So obviously there's a ton of volume below us in the 1800 zone. If we zoom in a little bit on price, just since October, most of the volume still much lower. If we go zoomed in a little bit more, again, this is all subjective depending on what you want to see. The most obvious near-term resistance, if we break down, is 2300, which makes sense. That's where there was a lot of price concentration. Now, let's say you don't like all this, like, subjectivity, moving things around, adjusting the boxes, blah, blah, blah. You can also use a fixed VPVR. And what you do with this one, let's say we want the volume profile in this range. We click one point and another point. So this is the range on the horizontal, and then it shows us the vertical volume, and it gives us the point of control of the range. So while we're ranging, we can use this to say, okay, this is where the point of control is. This is the biggest resistance. There's not a lot of resistance at 32, more resistance at 35. You can adjust this as you need. I tend to look at more stuff right to left, so I just prefer VPVR, but this is another way to do it. Again, looking at the entire zone here on ETH, support down here at 2200, resistance at 35, a minor support level we're establishing now. And this is, of course, obviously to be used as a complement to everything else. I would never just trade off VPVR alone, but I'll bet you if we pull up some random altcoin, TIA might be a good example, where without seeing the levels, you may not really know where most of the volume support or resistance is. So sometimes it can really surprise you as far as where the actual level is on some of these altcoins. So I think it's super helpful to just do a quick scan with the volume levels. And in this case, we can add a horizontal level just as a reminder. And we can add a level here, and then we can hide this if we want. And now we have our support resist range. And it's also kind of a sentiment gauge. Are we above where most people were buying and selling, or are we below where most people were buying and selling? So a little quick one today. I think this is super helpful. I would definitely use it. I use it all the time. I don't always talk about it, but I look at it very frequently just as a quick sanity check for horizontal support and resist levels in and around a range, in and around a multi-month bull or bear run. Even on lower time frames, if we go back to this example on, I think it was 63, somewhere around there, we're kind of setting ourselves up for a potential inverted head and shoulders again. So it would be interesting if we form a neckline here at around 63, and that is the resistance to break to confirm the pattern. That would make sense based on the volume. There was a lot of interest and activity here previously, and I would expect it to be an area where people would sell off again. People who are either trapped from up here, who are buyers, or people who were buyers slightly lower. So that's all I have for this one today. Like, dislike, comment, share, subscribe, and happy trading.